Hi, it's Stan Reinford, and welcome to this week's market update for April 1st. So, again, thank you for all the great comments, great conversations, great questions, great suggestions. Really appreciate it. So, we have a lot of new people that are joining. So, let me kind of give you an idea of how the chart works and everything. So, down below here, we have the candlestick chart. And the higher that we are in this chart, interest rates are lower. The lower we are, interest rates are higher. Each candlestick here, red or green, means something for that day. A green candlestick means interest rates got a little bit better or went sideways. When I say better, that means they went down a little bit. When it's red, it means interest rates got worse or went up or went sideways. Again, the higher we are in this chart, interest rates are lower. So we've been riding down ever since everything happened in the Middle East, and now we're getting some traction and coming back up. Markets are looking at a lot of mixed news right now. So let's kind of jump into it. We have a lot of things going on. And before I get started, happy Easter to everyone. Happy Passover to everyone. We have a mission to the moon tonight, and the president is addressing the nation. So let's kind of jump into it. So there's a lot of mixed news out there. In the last 48 hours, Treasury Secretary Scott Bessent and the president have spoken. It's been a roller coaster in the markets. As you can see here, 4 weeks ago, we were all the way up in this chart, and now we're down and we're starting to ride back up. So there's a lot of things going on. So we'll have to wait and see what the president says tonight. Oil's been fluctuating between $90 to $100 a barrel. Right now, it's running right around 100. Meanwhile, the average gallon of gas is somewhere around $4 a gallon, plus or minus. And President Trump spoke, and he believes that the war will be over in the next 3 to 4 weeks, and that he believes that the volatility surrounding all of this will be behind us also, with or without a deal for the Strait of Hormuz. The markets are kind of mixed on this whole thing and basically are waiting to see what happens. In the same note, the U.S. announced today that there's a third carrier that is headed there. So again, mixed news. We'll have to wait and see what happens. We've had several Fed presidents or Fed people that have spoken. Fed Chairman Powell spoke, and he basically calmed the markets about saying that, the inflation due to the oil he believes is short-lived. New York Fed President John Williams also spoke, and he believes the same thing. There was also talk of rate hikes last week. He believes that those rate hikes are not going to happen. And then also Fed member Stephen Moran, who is probably the most dovish out of all of them, he says that we should be looking beyond those inflation items and basically looking to cut rates up to 100 basis points moving forward. So again, we'll have to wait and see. Let's go to jobs. So ADP released their March jobs report, and showed 62,000 jobs were created. However, the market was expecting 40. So one might think that that was good. But when you dissected those jobs, one of the reasons that the markets did a little bit better today, because of some of the news surrounding tonight's address to the nation, is that what they found is 58,000 of those 62,000 jobs that were created came from education and healthcare. So that means only 4,000 were created outside of that area, which basically is showing not a lot of growth at all. And that means that when they look back, they found that 3 out of every 4 jobs in the last 2 years came from the healthcare and education sectors. And then the University of Michigan's Consumer Sentiment Index fell also. That reflected the weakest component there is in there, which was employment. And it basically said that many felt that unemployment rate would rise over the next 12 months, so consumers still are not feeling it. Let's talk housing. So first-time home buyers are still gaining some traction because interest rates have increased. There are some areas that properties are staying on the market a little bit longer, but I want to caution you, because what usually happens when interest rates start coming down is that more people will come back into the market and get off the fence. So now is a great time if you've been wondering, about buying, etc., and now's a great time to obtain that property, because remember, when more people come into the market, it sometimes pushes prices up. So that'll be your appreciation that you can then use to refinance down the road and get a lower interest rate. So what news do we have? So tomorrow we have jobless claims, and then Friday we have the BLS jobs report. As I had mentioned last week, it's coming out on April 3rd. So we'll have to wait and see what happens there. Interest rates are still running in the mid sixes, and sometimes a little bit lower, depending on how much money someone's putting down, credit, debt ratios, and how many points they're paying. Because remember, when you're looking at the interest rates that are out there, the average rate that you're seeing does not tell you how many fees people are paying to buy down the interest rate. And again, remember, we help in all types of situations, whether somebody is buying or refinancing, whether it is a primary residence, second home, or investment property. And we help in all ways. So if there's ever a circumstance out there where you need some help, whether it's for your clients or for you in general or friends and neighbors, let us know. We would love to jump in and help. So again, have a great week, and please forward and share.